Hey everyone. All right, let me get this link shared out for the live stream and we will get started. Hope you're all doing well. Let me share this in the Telegram as well. All right. So we're going to start by taking a look at Bitcoin quickly. Then we're going to jump into some altcoins. I got some requests on Twitter I'm going to cover first, and then we're going to go into a few requests from chat. All right. Let's just review Bitcoin quickly. We're going to keep it quick, keep it simple. Certainly an argument that we're hanging on the edge of a knife for a breakdown from one perspective, right? We were ranging for a month in about a 5% range. You know, if you don't include the wicks, about 4.5%, 5%. If you include the wicks, 5, 6%. So one of our more prolonged ranges over the last couple of years of straight flat price action. You could technically claim that we have broken down that range. And so that could be considered bearish. You know, these are our all-time highs of the year. We consolidate, we break down. That's one perspective from a price action perspective. We kind of front ran these highs. From another perspective, we're in a very strong uptrend for the whole year. Start of the year, prices just continually making higher highs, higher lows. None of that high time frame structure is broken. Right now, you know, if you were to say what you think is going to happen, higher, lower on a, as far as this structure breaking or continuing, you're just guessing. The structure is not broken, you know, just from a bullish market structure perspective. We have no indication that this trend is over. But there's other tools you can use. Key support, resistance, liquidity, all that stuff. I would say that we've also potentially we're retesting, potentially reclaiming these lows. That's something to think about. I think if we do carry on higher, which certainly is reasonable from an order flow perspective, I'd be watching these highs, this low. There's some fib extensions here, the 123.7. Won't get into all of that. I'll give my perspective, bullish and bearish, and then we'll get into some altcoins. I'll talk about some of the key levels here around a medium time frame. Maybe we'll what am I doing? Why am I typing that in there? Just click this. Maybe I'll look at low time frame quickly as well. So anyways, high time frame, here we are. We're in an uptrend. We're testing a potential breakdown that could be a deviation or a range lows. Certainly a lot of liquidity under these lows. So far we're holding up. We're consolidating locally. This is over the last, you know, let's call it 24 hours with some bullish absorption locally. We can even look at that really quickly. My perspective is that higher is still the more likely outcome. Whether it comes from here, maybe we come lower, we test some levels to the downside. You know, maybe we get a simple horizontal retest. I think higher still is likely to take this liquidity up to the upside, but anything can happen. I think from a simple range perspective, Like I was expecting higher here, but I took a short just because we just had a really technical rejection up here where we took the range highs, we rejected back. So I thought, well, I'll take a short here because if we can't break up out of this range, then you could just trade it as a range. We ended up taking the range lows once, consolidating here, getting a little bit of bearish absorption as we consolidate, range lows again. We could range here for another 5 days, and that wouldn't be crazy. So that could frustrate a lot of bears and bulls. But anyways, that said, I think testing this liquidity up here is a nice idea. I would certainly be interested in shorting that. I'll just say quickly, I've had this idea since 8 months ago. Well, December of last year, maybe late November, on the S&P futures, of pushing up into this level. And what I'd like to do is coincide a swing short with maybe a sweep of these highs into the 886, a rejection on Bitcoin, the S&P, and then at the same time the DXY here is in December I drew this channel, wanted to come down and test this channel at the same time as the S&P futures tested this level. This is a high time frame idea. There certainly can be some variance here. The TA was done 8 months ago, and I kind of thought, well, maybe Bitcoin's going to be taking, as maybe over the last 3 or 4 months, Bitcoin was going to be taking a major high there, and at the same time as all this was happening, but Bitcoin just kind of stalled out. The correlation with the S&P completely evaporated, which had to happen a little bit. It's funny because I even posted about this on Twitter, I don't know, maybe 6 months ago, whenever it was. And Maine, whom some of you might be familiar with on Twitter, had commented, if the S&P goes up to 4,600, Bitcoin's going to be at 40K. Because I had Bitcoin going up to here while the S&P went up to 4,600 from down here. And I had a little back and forth with him as a joke. But 6 months later, here we are. Bitcoin's up. The S&P's up at 4,600. Bitcoin is not at 40K. So this is all in line with kind of my ideas, but we're not quite there. I'd like to come up and take these highs, maybe retest this level. That's an interesting idea to me. I drew this line a little wide. There can be some variance. But the point is, if we do push up here, I'm going to short it with nice tight invalidation. And I'm going to be targeting down into these lows. There's some harmonic ideas. And what we won't get really deep into this, but it's important. It will be important for the altcoin analysis. When you're doing technical analysis with ideas, whether you're using simple things like ranges or trends or more complex stuff like Elliott waves or harmonics or whatever it is, it's not really a prediction of where price is going to go. Like if you're trading a range, whether it's like range highs to range lows locally or range highs to range lows, you're just trading in the context of the time frame that you're in. So if I'm taking a short here, there's a lot of confluence for different types of styles of analysis and liquidity to come down, maybe break this trend line down and run these lows. But anyways, if it's not to say that price has to go down here, I'll cut my short if we break out, because there's lots of ideas that could see us pushing higher. I think this would be a key idea if we start claiming this level, come up and take these highs up around 50K. So that's always a possibility I'll be watching out for. So key levels for me here, retesting this, swing short. We'll get into low time frame very quickly, then get into altcoins. If we break out, not to say there's no intermediary levels here. I don't expect price to go from here to here in 30 seconds. But the next major level is taking these highs. I would much rather see us come down and take them later. But doesn't really matter how price action progresses there. If we do break down, I'd say we always have to keep an eye on all of these major horizontals as high time frame levels. I'm going to be looking at this retest of this level as a key level. Obviously, if we break that down, well, the sweep here. I mean, that's pretty simple. I would like to take these highs first for a swing short to get if price does come here. But we'll see how it progresses. Let's get into low time frame very quickly, and then we'll go to altcoins. All right, so here's the range. You can draw it out a little differently. We've obviously wicked through the highs of the range many times. Nice high volume on a lot of these wicks. Nice high volume on this wick. This is the first time we've wicked into the lows and not recovered instantly, but that's not necessarily bearish. We can say here that we are prices kind of grinding towards these highs. I had drawn out in the members Discord, let's just go to the 15-minute, this idea yesterday of looking at this as a local range. I think I drew it around here, and you know, the potential of looking for scalp shorts sweeping this high. I'm not particularly interested in that today, and I'll say why. Let's just pop over to the order flow really quickly. Hold on, I'll get there. All right. So we've been consolidating here locally with bullish divergences. This is the 5-minute chart. And what this means is just there is aggressive selling pressure coming into the market right now. Market selling. That's how we define aggressive here. So we have this aggressive selling pressure in the context of these lows. We're seeing signs of absorption. That means limit orders holding price up locally. That can be a sign, especially after some of this major liquidity has been grabbed, which we did have 2 major liquidity grabs here. And let's just, let's make this comprehensive to an extent. Okay. So when we say liquidity grabs, we have 121 million volume in this 5-minute candle. This is the Bybit BTC USD pair. I'm sure most of you keep a general track of volume. That's a lot of volume. And then obviously we come down and sweep the lows again. Let's find that, 13 million, 39 million. It's a lot of liquidity, and we have major signs of absorption locally here, even before this sell-off. So anyways, it wouldn't be crazy to see price push up into liquidity to the upside. Major liquidity has been grabbed. Now we're consolidating bullish absorption. From an order flow perspective, locally, that suggests pressure is being put on price to go higher. There's certainly a reasonable explanation for why bigger traders might want to push price up after taking the other side of all of this selling pressure. But there's a bearish scenario, which is all these massive orders that are filling, bigger traders filling these orders, maybe some big market makers. If price starts coming down, they have to unwind those positions. They could get very bearish, but that's not the most likely scenario from an order flow perspective. So anyways, right now leaning towards higher. If we claim the range again, there's no reason not to suspect. Let's go over to TradingView really quickly. That price could retrace this move quite quickly and come and retest these highs. That's going to be a major liquidity zone. That might offer a scalp or a hedge short opportunity depending on how price reacts. Maybe price gets up there and there's not as much liquidity as you'd expect. Again, you should see a big spike in volume if there is in fact liquidity there. If we break out of there, well then you're expecting to push up to the highs and maybe come up and test this level would be reasonable, right? We could always break back down and continue ranging, but that's my general idea here. When you've been in a range for a month, if you can't identify at that point key levels, Like, I can understand how it could be difficult to maybe anticipate a range before it's formed, but we've been in a range for a month. All the levels are pretty clearly defined. Reclaiming the range is important. And then all the local levels are pretty clear. They either hold up or they don't. So I'm taking technical trades. You know, a nice sign of strength here is obviously reclaiming the range. There's local levels, local higher time frame levels above. My perspective right now, what I'd really like to see is pump up, take these highs, reject, and maybe get that swing short set up for the next couple months. And then I'd leave that trade alone if we break down, and I'd look to trade lower time frame stuff over the next couple months if we start trending down. So that's it. That's Bitcoin. Let's move on to some altcoins. We'll start with Ethereum. All right, Ethereum. Again, the horizontal levels are kind of clear here. We've retested this high once. This is the daily chart. We just came and retested this high, actually perfectly, which was a slight sweep of this high, maybe a slight front run of the 786. Yeah, it's all right there. Certainly a level of interest on the high time frame for a potential swing failure. But here we are grinding back down. We have two ascending structures that I'm watching here, this one and this one. ETH really likes trend lines on most time frames. 1, 2, 3, 4, 5. This is a nice ascending structure to watch. And it would be surprising if we test the level again to potentially break it down. The more times the level's been tested, the more likely it is to break. Part of that's because more people are watching it. It's more likely to produce liquidity. But you know, as far as ETH goes, and you're going to find this theme with a lot of the altcoins, is I'm always thinking about Bitcoin and my general analysis there when I'm thinking about altcoins. And so, you know, if Bitcoin holds its range, like, would I expect Bitcoin to hold its range, reclaim it, and test the highs of the range, and at the same time have ETH like break down this trend line? Of course not. So I'm always going to be taking into consideration, well, what's Bitcoin doing? If Bitcoin does reclaim the range and alts start following along, well, Bitcoin coming up and retesting its highs would make sense. We have a bit more of a clear local structure here on ETH. Although Bitcoin also has local lower highs, they're all like right next to each other. This is a little bit more defined lower highs. So anyways, I find that when Bitcoin breaks its market structure, or sorry, when ETH breaks its market structure, it's a little bit more likely to be relevant. Like, Bitcoin fakes out a lot more. ETH tends to maintain kind of the idea that like a trend line breaking is significant, a trend line holding is significant, market structure changing on a lower time frame is significant. I find that that isn't so much the case with Bitcoin. It's more likely to fake out those ideas. But ETH is a little bit more refined. So anyways, we have some local ascending structure here. ETH breaking out of these highs could be a sign of strength here. This grinding structure typically ends in impulses, not always. That can be grinding to the downside, grinding to the upside. You can see just price being held up, grinding higher. It's not unreasonable to think we could go higher. Okay, but we'll talk about some high time frame ideas. Obviously, well, this should be obvious. This is all very critical. We're grinding up into these horizontal levels. There's very little structure here for resistance. if price breaks above these highs and holds them and doesn't swing failure, where do we think price is going if we can hold these highs as support? I mean, there's no structure here. You know, I'm not saying it's going to go straight there, but or that it has to go there, but what would make sense is, well, price starts moving towards these highs as a major target. Because would it make sense? It could either make sense to have a fake out here as a more probable idea, or much higher, but it doesn't really make sense to like push up and maybe have this be our major high. It's possible. You know, you never want to ignore, even if they're just naked fibs, you never want to ignore your key, your key fibs. So if we push up here, get a nice reaction, nice volume, I'm not going to ignore this fib, even if there's not a lot of confluence. But I am going to keep in mind market structure. Maybe we reject, retest these highs, continue up. So I'd say this is critical. If ETH happens to push up into these highs at the same time as Bitcoin tests its highs, we get a rejection. If you're trading ETH, that could be a nice short setup. Maybe we come back down, consolidate on this trend line, and then lose it. I would consider losing this ascending structure very significant on ETH. It should be significant on a high time frame. And if we lose it, similar to Bitcoin, we're in a range. High time frame ideas would be looking for swing longs down into the lows of the range. The pivots are a little bit different on ETH than they are on Bitcoin. This low, this low. I'd like to see ETH come down and take these lows into testing these lows if Bitcoin tests the lows of its range, but we'll see. Right now we're in an ascending structure. To start thinking about these levels, well, you really need to break this down, but I'd be very interested in longs back at the lows of the range if we do. And again, we don't know what's going to happen here. I'm just talking about structure. This structure should be very clear to everybody. If we can't break out of these highs, where do we think price is going? It's not going to stay here forever. If we start reclaiming levels, you know, maybe we continue ranging. If we just keep breaking down levels, well, you look to your next levels. There might be scalp setups on lower time frame stuff, but this high time frame structure to me here is very clear. Nothing to be confused about. If we do break this down, that may be a sign that we are not going to come up and take these highs, because typically those trend line breaks are significant. So that's my perspective on ETH. Just looking at this as a simple range, and on a high time frame, would like to trade back down to this $800 level. Those nice potential swing positions. I'll say one more thing. You know, I talk about when I talk about something like, you know, back down to 17K on Bitcoin or 800 on ETH, what surprises me on Twitter is like you'll get comments of people saying like, you obviously don't know anything about Bitcoin or the fundamentals, or you don't look at on-chain if you think it's possible that we go to 17K. It's like, I'm going to say something that maybe might come off rude, but are you a fucking idiot? Sorry, but it's like, I'm just saying, like, don't get into this mindset of, look what just happened to Bitcoin. We just went straight down from $70,000 to 14,000, or 15,000. And people get it in their head that it is now impossible for Bitcoin to go down to $17,000. I'm not, you know, whether or not you think it's likely, or it doesn't really matter. But to start getting into the mindset, it's not impossible for Bitcoin to pump straight to all-time highs. It's not impossible for Bitcoin to break down to 17K. It's not impossible for Bitcoin to take our 2020 low. That got me a lot of traction with a post, and lots of people commenting I'm dumb. Some people agree with me, but it's funny how certain things get so much engagement. I'm not saying that 3K is maybe even a reasonable or likely target for the next couple of years, but it's a possible target. And the fact that people think it's impossible, they think it's impossible that Bitcoin tests its 2020 lows. What makes it impossible? Oh, there's going to be too much buying pressure. You know, people, it's like, it's the exact same thing that makes this impossible up here, right? There's no way Bitcoin will ever break down 40K because, you know, the institutions, and it will never break down 50K. It will never break down 30K. The institutions, it will never break down 20K. It's just like, it just goes straight down. So now, just for those who have this perspective, it is not impossible for Bitcoin to go to 17K. I wouldn't even say it's that unlikely. But anyways, this is a nice uptrend. We've seen a nice move this year. Got to stay reasonable. Is this where I would like to be looking for swing longs? No, but you know, it's always possible we break out here. So anyways, swing longs are nice at support, but there is some nice tight invalidation long setups because of this local range. If we can reclaim and hold, those might work out. All right, so let's get into some altcoins. We are going to start with Sol. You know what's funny? This was a case, I did analysis on, it was on a live stream. You could probably go back to around the 13th of April or maybe here. I did an altcoin live stream and we did ADA. And I said, hey, I'd be looking for something like this and a push up into the 123.7 and maybe come down here. And I think I said, you know, I'm not trying to alarm anybody. I know that seems crazy. That price could go down 50%, but I don't think it's unreasonable. And that would be like my technical targets there. You know, price comes down 50%, but up here it seems impossible. People think there is no way that we're going to drop 50%. That would mean Bitcoin would have to do this and all these. It's like, just whatever you think is impossible or possible, anything's possible. So here we are, you know, we swept these lows, didn't quite hit this target. Just saying anything's possible. Speaking of, let's go to Sol really quickly. I feel like I'm actually dragging out this live stream to a large degree. So first thing we're going to do is turn off all the analysis on these alts. Wait, what exchange is this? Let's go to Binance. Some of these have not been analyzed in a while, but I like to analyze on Binance for high time frame reasons, because some of the other exchanges don't have as much data. All right. Here we are with Sol. This was a nice grinding structure. Let's just start off with marking out all the key levels. So the reason that I'm going to go through this on a higher time frame is I want to just show some basic practices where we can mark out some key ideas. These highs, these lows. These are just our daily candle key horizontals. It's always nice to have those marked out. We want key fibs to the upside. This was not quite the golden pocket, but pretty close. We have a new high, so we'd pull from low to high. Again, just marking out key ideas. I like running the 50% fib, the 382. All right. We're going to pull some volume profiles. Very high volume node here around the 50% fib, which if you looked at this as a range, the 50% fib would just be the center of the range, right? range high, range low, the center. A nice high volume area here. And of course, that was a perfect touch, almost, of this parallel high. And so the way you would draw this is, just to show you, for example, you would take this high time frame low to this low. That gives you your trend angle. You would anchor it to the highs here. It can be confusing when it's extended, but you can see here. And then we go into, so you would pull it here, and then price impulses up into the top of this channel. A nice reaction there. Okay, so it's just important to note this is maybe a valid ascending structure. We're coming down into the middle of this ascending structure with our range, horizontal range around this point of control. Are there some nice confluences here for long setups? So what I'm going to be doing with alts is I'm just going to be identifying interesting trade setups. Not necessarily doing, you know, I'm just going to mark out how I would maybe look to trade some of these assets. I mean, I think it would be interesting to come down and retrace this impulse, retest this low, maybe take it into the middle of the horizontal range, into the point of control. You know, if we wanted to look at this on a lower time frame here, let's go to the 4-hour chart. I mean, the idea would be, however this all progresses, this looks like we're in just want to see if there's any touches on any of these trend lines. Doesn't really look like it. It's close. But anyways, however price action progresses, maybe we fake a breakout here, come down, take this level. That would be an interesting, nice tight invalidation long setup to me. Obviously, if Bitcoin rejects from this local range on a higher time frame, you would expect many altcoins to follow, although some to correlate. But yeah, come sweep these lows. I think this is a reasonable idea. Maybe look to market in on a retracement, use nice risk management, come up and take these pivot highs. And what would happen here, let's just one second. What would happen here is we have this downtrend, and maybe we come build up a lot of liquidity under this downtrend, sweep these lows, and then take all that liquidity to the upside. And maybe get something like, depending on where the invalidation comes in. This is with a 2.5% stop loss, but you know, maybe there's a 15, 20 R trade there up into taking these highs into a key fib. Now, the idea here would be to maybe think about a bearish continuation on a higher time frame. So you would say, the idea here for me anyways would be, well, we come and retrace this impulse. The origin of an impulse is always a nice target. I've traded this setup many times. Sometimes it works, sometimes it doesn't. But you come down, you take that level, you impulse up into these highs, key fib, which would also kind of be like a retest of these highs. And now we have a range. So I'd be maybe interested in, if this worked, flipping that idea short up here. You could try to trade it tight off a rejection. You could, I know this is kind of crazy, but you could even get a 2-3 hour swing trade, trading it very small with an 18% stop loss. That's not how I prefer to trade, but this is quite a big wick. And technically, if you're trading this as a horizontal range retest, you could argue that's where your stop should be, but there's probably going to be some local PA up here that you could get a much tighter invalidation. that's still reasonable. But that's how I'm looking at Sol. If we break down, well, maybe we run all these lows, come back down, retest this low. That'd be another interesting idea. Ultimately, I don't like to get into the mindset where it's like, I need to get a long on Sol, or I need to get a short. We're going to break down. We're going to go up. I don't know what's going to happen, but there are some nice key levels where you might try longs, try shorts. If they don't work, they don't work. You wait for other key levels. But you never want to get into the mindset of thinking you know where price is going to go, and you're just trying to get long or short before it breaks down or breaks up. You really want to mark out key ideas. If this idea didn't come for me, and I'm not just going to take random longs. Now, of course, we're in a local range here. I'm not saying you can't trade local PA, and you can't say, well, we're in a local range. Maybe I'm scalping shorts, I'm scalping longs, longs scalped into here. But again, if you're trading on this time frame, then you need to be taking profits on this time frame. You can't make every 15-minute chart trade where you're using that local structure a swing trade, or you're just going to turn mini winners into losers. So high time frame, just my ideas on Sol. All right, let's go to OP. I have 3 alts that I'm committed to doing before we get into chat requests. Somebody's saying my live stream's blurry. You should be able to go into the settings there and change that. I haven't read any of the comments. Yeah, I think the blurriness is due to just the settings. You can change the, from 360p to 1080. Okay, what am I looking for here? Might not even be on my list. So again, we're gonna start fresh on these alts. We're looking at OP. Just always want to be aware of structure, house price interacting with structure. Ooh, we never took that impulse low. That's interesting. Some nice little local swing failure short set up there. Maybe was this the first time we took this impulse? All right, nope, we front ran that. Okay, first things we do is we look at levels. I don't see any ascending structures here on this that seem relevant. This was a relevant descending structure, but it looks like we have, trending structures, but this looks almost like a parallel structure. Not quite. Okay, well we've interacted with the center of this parallel structure. This actually looks like a very clear, it's almost like a razor sharp trend between all these lows. Now look on a lower time frame. This would be quite interesting, wouldn't it, to come up and take these highs, tap the top of this ascending structure. So this is not, the only reason I'm considering this as a potential ascending structure here is the interactions with the center line. We can look at that on a lower time frame. I'm just trying to build a narrative here for price. So we have this ascending structure. Let's bring this so it's a little bit more accurate. There's a nice touch, nice touch, nice touch. Then obviously ping, 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 ping. Let's clean up this trend line a little bit. It's very easy to draw something on the daily chart and it not really be that accurate. I just want to look at it from all of these. There's certainly an idea here with the middle. It's not a perfect trend line between these lows, but there's an idea here with the center of this channel. Obviously price is interacting in a bit of a region. It always come down to, I like to analyze price on a high time frame for my swing ideas, but then use local ideas for my actual entry triggers. Don't want to just randomly enter anywhere. Want to be patient, but then you want to be precise when you actually execute a trade. A bit of an ascending structure at play here. Potentially, if we can bounce here. We have a retest of this low in play. I'm just actually thinking of I'm not saying that I'm going to take a trade on OP here, but what I am saying is, it's not always the case, but sometimes there is an interesting idea right where price is. I don't know if there's a lot of confluence here. But the idea here would be, the local idea here would just be, you have taken this low with this deviation and you come back and retest it. Where's the 786 here? It's always a nice fib to watch for alts. So we're right on the 786, right on this retest. Again, this is not, I don't recommend anybody take trades that they don't understand. That's not a system that they particularly use. You should really do a lot of back testing, paper trading, data collection, execution. The psychology of trading is such an important part. And then the most important part, which I'm going to make a video on soon, is your risk management. I've made many videos, but I'm going to make something that I think is going to really land for a lot of people. A lot of people have trouble thinking in probabilistic terms. That's the most important part. So if you're taking unreasonable risk, every system is going to blow up eventually. But this is a technical idea here, right? Where, if I was really interested in trading OP, not sure that I am. You have a low, it's swept, it's retested. One thing you could use as a sign of strength instead of just trying to trade the level. Well, let's go to the 5-minute chart here and talk about some ideas for execution. Is instead of trying to trade the level with a stop under this low, you would wait for this grinding descending structure to break. And use that maybe as an entry trigger. So that's just a little break in market structure. Maybe gives you a little bit more probabilities. Because right now, price is grinding down, which typically ends in an impulse. So if that's the case, you'd want to wait for that grinding structure to break, maybe, as an idea. And so the one comment I'll make about risk management and proper sizing. So let's just think about, I put this analogy on Twitter yesterday about saying, if you're a blackjack card counter. I actually read an article that was kind of interesting about somebody who made a ton of money playing roulette because it's the exact same thing you do with trading. They took tens of thousands of recorded numbers from roulette wheels with the theory that over time these roulette wheels would develop defects, little chips, slants, little grooves, whatever, and that might cause some numbers to be landed on more than others. And so anyways, they recorded all these numbers. they found that that was in fact the case, and they made millions of dollars. It's back in the 30s, 40s. I think somebody did something similar recently, but that slight edge, they were able to make millions of dollars. But that whole system would fall apart completely if you bet too big, because obviously you're not going to win every spin. It's just over time you're going to win more than you lose. Same with card counting. You have a slight edge, but if you've developed that skill, there's going to be variance, right? And you could have, so the idea is you have a perfect system that is mathematically guaranteed to make money over time. But if your sizing is wrong, you're mathematically guaranteed to lose everything. And the same goes with trading. So if you don't understand sizing, risk management, you could have literally, let's just say hypothetically, the best, most profitable system ever derived. And if your sizing is wrong, you'll lose money trading it. If your position management, sizing, risk management is wrong, your bankroll management. So that is, why is that the most important part of trading? Because no system works without that component. Doesn't matter what you're doing. Doesn't matter if it's the best system in the world, a mediocre system. But anyways, we're seeing here price breaking down this low. Daily lows are always a key idea on OP. We have some clear lows here. Let's get rid of this local trend line here. Could come and take these lows. Be an interesting idea. I'd just mark out key levels, shorts to the upside. I'd keep this channel on my chart. You know, there could be some long setups here locally. We have a little local range. You know, Bitcoin obviously is playing around in a local range after a breakdown. If we reclaim these highs and break out, OP likely to follow. If we break down these lows, you would expect this impulse low to be tested. I mean, sometimes what I do with alts is I just say, hey, I'm really interested in like super clean setups, like a nuke. So I'd add an alert and say, like, if we could take this impulse low, I'd be interested in this setup as a nice tight invalidation long. So I play around with something like that. But what I don't do, and what you never want to do, is just get into the habit. I mean, there's just no way that this ever is going to end well. You might get lucky sometimes, but thinking, I think price is going to go up to $2. Or you think it's going to go and test these highs again, or you think it's going to come test this daily high, and you just enter a position with no invalidation. There's no setup there, and you're just entering randomly, trying to guess where price is going to go. So the difference with a technical setup is you're waiting for a key level to be interacted with, where you can get in with clear invalidation, and it's a defined setup. So that's what technical trading is all about. You have, I'm not saying there's only one way to trade, but you have your system that says, hey, for example, maybe you have this high marked out. If we sweep this high and come back below it, that's a technical short trigger for me. I'll take that short. So I'm interested in that short. If we take this low and come back above it, that's a technical long setup for me with a stop above or below that new low. So you can have ideas, but if you have a trending idea for continuation, you can say, hey, I think we're going to continue trending up this. This is my idea based on whatever XYZ analysis. So when price pulls back to here, I'm going to look for a long setup, sweeping these lows. That would be like a swing failure. If you're trading a breakout strategy, you would say, hey, I'm going to wait for this retracement to resolve. I'm going to wait for price to break out of this downtrend. It's getting messy here. This breakout wouldn't have gone so well. This local downtrend, this local downtrend, maybe you say, you could mix some different levels, right? So you're saying, I'm going to wait for a break of the local downtrend, a reclaim of these lows, and a break of this horizontal level. Let's clear out the chart here just to make this idea clear. So I'm also just talking about analysis is great, but how to set up a trade, its analysis is useless without that. So maybe your idea ends up looking something like this as a breakout trade, you know, a 4R. You wait for a reclaim, some horizontal breaks, maybe wait for these horizontal breaks. I don't like trading that way, but you know, the further away your invalidation is, the smaller your size would be, but it doesn't really matter. I mean, it matters, but what I'm saying is it doesn't matter how you trade, but you have to size accordingly. Some setups have tighter invalidation, some have wider invalidation. I mean, even a sweep of these lows could be interesting because we do have that trend line there. But that's a local setup. All right, let's move on. We are going to ARB. What is our... I can't remember what the deepest price history is on ARB. Let's see what we got. I mean, this will probably be fine. Not a lot of price history here. This will be quick. You can mark out some of these ideas as retests. Like maybe this one I would keep, this one I'd get rid of. These lows are... And I'd keep this one because we haven't retested it yet. So if like this is a range deviation, just an idea for possible confluence. We have broken a trend line here. A trend line idea. There's never really an established trend line. Just want to see if there's a parallel structure here from the highs. There is. Let's look at this on a bit of a lower time frame really quickly. There's a structure here. We have not, of course, bounced from it. We've had a slight reaction, but it's very clean right on the ascending structure. From a horizontal perspective, no lows swept here, but maybe consider this close to a range high retest. I'm just getting a context for price here, right? You have to build a kind of a framework. Where is price? What levels is it interacting with? Clean descending structure, nice rejection off this third touch. I'm sure there's some confluences there that would be worth considering. None of my fibs are turned on. Just want to see what, if any, what fib this rejected from. Not quite the 618 from there. It's the 618 from there on the 4 hour. All right. Technically, this would be taking these lows if we'd reclaim them. So you could say, well, here's a nice daily candle low, right into an ascending structure, a reclaim. We're at a retest right now. Could there be an ARB setup here? Well, if you're trading in the context of this channel, we're going to look for more confluences, but let's just consider this. It's kind of a nice idea because what's the volume look like here? It's not crazy. It's a nice idea because we take this more obvious trend line that more people are going to be watching. We break it down, so that looks quite bearish. But we fall into this ascending parallel structure, take this low, nice clean swing failure. Trade up into the middle of the channel. So it makes sense to trade into the highs of the channel. Well, it's not hard to imagine that if price does rally here and we start breaking out of this descending structure that was the origin of our impulse to the downside, we could run up through these highs. That's not crazy. see where this is here. Not a lot of price history though. This would be the center line if this was a range. But let's look at this on a lower time frame. So 1.5% stop loss if it's traded as a swing failure. If we break down, I would consider, you know, I want to pull this fib. I just want to look at a downside level really quick. Then we'll look at this local. Come back down into these lows. Take this low. It'd be nice to take these lows if we break down though. All right. Well, yeah. So like the 786 here on this retest, that could be a nice idea on a high time frame if we break down. So the idea here would be like, say I took this long. I'm just giving an example, and we break down. Well, and we do this. I'm not going to try to just keep longing everything. I would just wait for another clean setup. I take that long. And so the idea here would be, let's just say you took all three of these longs. I'm just talking about from a, let's just say you took that long, you took that long, and you took this long. This just falls in line with the risk management, sizing, and bankroll management, that type of thing. Just giving an example here. Let's just say you took all of these longs. Let's say even you took this one wide with a whatever. This one loses. You lose. Let's say you're risking $1 per trade. You have a $100 trading account. So if you, and you can just adjust the numbers for however it applies. I'm just going to explain the concept. You'd lose $1 here with a chance of making, let's call it $13. So you lose $1. Here, you lose another $1. You had a chance to make 11. You lose 1. You had a chance to, here you make $10.30. You've lost 2 on your last 2 trades. So you've made $8. Even though you've lost 2, won 1, this is balancing your risk reward. You don't need all your trades to work. And you're only risking 1% of your account per trade. So you can have some variance. You can survive some drawdowns. If you're risking 50% of your account per trade, 20%, 10%, can get very hairy going on even a 2 or 3 trade loss streak. And same thing with blackjack. You have an edge over time, but you can also lose 10 hands in a row, and you need to be able to survive that inevitability. But let's look at the low time frame here. All right, so we have this retest. I think this could be an interesting setup on Arb locally here. I'm not a breakout trader. I wouldn't short personally here. I'd rather have shorted resistance, like this trend line idea could have been interesting. But we have this retest. It's a local retest. It's a retest of that daily low that we were zoomed down looking at. It is our local golden 618. Looks like a very clean interaction, but I think I drew it wrong. So we front ran it a little bit. To tap it would be to come down and take this little impulse low. So this is where you would get into the nitty gritty, where you might start looking at to really get a precise entry, low time frame structure. You know, if this was a setup I was interested in trading, I might say, well, I'd get a really nice low time frame entry if we could come sweep this low, impulse. But I'm still trading a higher time frame idea, so I would maybe consider alternatives. I'd say maybe if we break out of this little grinding price structure after this retest, I'd be interested in another setup as an alternative. So I get into my trade, because my trade is, in this case, it's a higher time frame setup. It's this higher time frame parallel channel, higher time frame daily low being swept. You know, I could have even considered entering like something like this with a nice tight invalidation, sweep of this low, nice reaction, using a local idea there. But anyways, you look to just get into the trade reasonably using risk management. Your stop loss could be, you know, you could put it right under the low. You could put it here, 1.5%, 1.3% away. That'd be like a technical invalidation after a swing failure. And we've already kind of talked about targets. I think retesting these highs, it'd be hard not to justify looking to take some profits there. or even just closing the whole thing in the context of this trade, which would be kind of around the levels I reviewed. All right. I swear. I don't know. I guess it's nice to make the chat look active, but I swear every live stream, is it you, Vicus, that's always spamming the same thing over and over and over again? I just looked at the chat. All right. Now we go to INJ, and then I'm going to look at chat. Sorry that this live stream has kind of been long, but I really want to leave you guys with things to think about. There's going to be lots of people here that they have really no exposure to any of these concepts. They're just looking for the next big hot altcoin to buy. They don't know about risk management. They don't really know about technical ideas. Okay, I'm just scrolling around. I'm not even thinking, just talking. INJ. All right, so let's delete old analysis. Sure would be interesting to push up and take these highs, wouldn't it? A nice clean short trigger there for a swing short. So I want to talk about something really quickly. So people would say like, oh, you can't trade with a stop loss 8% away. That's too far. That's not true. It's just risk reward, right? So your size would be smaller. So here you'd have, if you want to only risk 1% of your account, you obviously can't put, let's say you have, it doesn't matter, I'm just going to use $100. You can't take a short for $100 position size with a stop 10% away if your entire trading balance is $100, because then you're risking 8%, right? So let's just make it 10% to make it simple. So what would that mean? Well, that means that if you're going to trade a setup like this, you need to size 10 times smaller, because you can't risk 10% of your account. But is it still worth taking that trade? Well, it's just risk reward, right? You can risk $1 to make $5 if you were to trade it this way. And so it's just for every dollar you're risking, you're making $5. The risk reward still makes sense. That you can trade with a wide stop if you're trading into these lows. If you get a cleaner, tighter setup, that's okay. But you're really more worried about figuring out, not thinking about how far is it to your stop loss, how far is it to your target in percentages or distance. You want to see the relationship between the two. So this trade makes sense. For every dollar you risk, you make $5. This trade doesn't make sense. Your size would be very small. For every dollar you risk, you make 60 cents. You could claim it does make sense because you could say, well, then the probability of this trade working is probably above 50%. But anyways, we won't get into all of that. But this would be an interesting idea. Come take these highs. Even trading back into the lows here. I personally would try to trade this setup tighter if I got it with local price action. Say INJ is not particularly, like the structure is not very complex here. I mean, we truly have a move down, consolidation, straight up, no move right through this sort of structureless void. The structure is very clear. Clear highs. You know, these lows are going to be relevant. Personally, I would just look to trade high time frame stuff here based on simple structure. Taking these highs and rejecting could be a short trigger. breaking out of them, you could try a breakout. I'm not saying you couldn't. These highs would be the next clear target. That's this clear structure here, and these highs, all-time highs, if we break out of that. But anyways, I think INJ is pretty simple. Just the structure is so simple. Highs, highs, highs. If we break out of these, expect these. If we break out of these, expect these. If we come back below these, expect to retest these lows as a likely idea. If we break down, price is probably moving to deeper liquidity. I wouldn't be interested personally in trading anything long here as we're consolidating at resistance. And I wouldn't be interested in shorting here. Nothing I'd be interested in trading here personally. I would say that if anything, I would say if I was looking at this, I missed maybe a short with tight invalidation sweeping this high. There's obviously some retest ideas here, lower time frame stuff. And it's not that low, but you could say coming and taking these daily lows could be a trigger as well. That's just a bit of a lower time frame idea. And you could trade that up through the highs. Something like this. But you'll notice that I'm not suggesting I know where price is going to go. These are just technical setups. If we take this low, reclaim it, that could be a nice technical long setup into these highs. Nice tight invalidation. Your risk reward could be probably somewhere 12 to 1, 15 to 1. All right, I'm seeing a couple comments about leverage. I remember seeing a question earlier and I forgot, and now I want to answer it. Just scrolling through. Someone asking, do you like to scalp or swing more, and why you're using high leverage mostly? Well, here's the thing. I scalp and I swing, but by definition, a swing trade, you can't take a swing trade every day, right? Because major levels aren't being hit every day. So you're going to take swing trades less. You're going to take medium time frame trades a little bit more. You're going to take scalps at a higher frequency. But scalping, you typically would sit down and you'd want to trade, like say you were scalping, I don't know, this range or whatever. It's going to be higher frequency. You want to take all the shorts, all the longs. And even if you had, say, a swing long from down here on INJ, you would take all these trades on local structure without even touching this trade. Just because you're short here doesn't really have anything to do with this trade. It's a completely different time frame. So the important thing is, if you have swings, you leave those to develop on the time frame you're trading them on. And if you're taking scalps, those typically should be independent of your swing trades. So if you want to say, technically anyone should be, if they're doing scalping or day trades and swing trades, you should always be taking more lower time frame trades in that case, because if you're taking a swing trade every day, then you're doing something wrong, because there's not swing tradable levels being hit every day. As far as leverage goes, we won't get into this whole discussion, but leverage doesn't matter. It's you trade based on your position size. That's what matters. Leverage is a tool that should be used to reduce your exchange risk. If you have $100, you probably just put it all on an exchange, and you're not going to use leverage because you have your entire trading account on the exchange. And you don't use leverage to trade more money than you have. If you have $1 million, you might not want to put $1 million on a random crypto exchange because there's an exchange risk. We've seen that with FTX. We've seen massive exchanges collapse. Everybody loses their money. And so risk management's actually leverage is actually a risk management tool. So you could say, well, instead of putting $1 million on an exchange, I'm going to put a smaller amount of money on the exchange. I'm going to use leverage to represent that $1 million. I'm still going to use risk management and validation, but I don't want to have all my money on an exchange, because if that exchange goes under, then I lose everything. I lose my entire trading account. That's a high risk proposition. So why not put a smaller amount of my capital on the exchange and use leverage to represent it? Then if the exchange goes under, I'm protected. And you can play around with that balance every couple of days, however your trading's going. So that's how leverage should be used. How people think it's used is, oh, obviously a lot of people think if I had $1 million, I wouldn't use leverage. It doesn't matter what size you're trading with. The risk reward, your bankroll management is going to be the same math. But like if you have $1 million, you don't put $1 million on and then think, oh, I'm going to use 50x leverage and trade $50 million position sizes. Yeah. So anyways, if you have $100, you don't use 50x leverage and trade your entire account with 50 times your available trading balance. I hope that makes sense. And then as far as invalidation goes, you have cross margin and isolated. So you can trade with 100x leverage and a stop loss 5% away. It doesn't really matter if you're using cross margin. But most people don't understand any of these things, and they're trading with like a very small amount of money. I mean, not to them, but maybe a couple grand or whatever, and they're putting all their money on an exchange anyways. And so I would just say, unless you're an experienced trader, and an experienced trader doesn't have questions about these things, you shouldn't even touch leverage. If you have no idea what I'm talking about, you shouldn't be trying to figure out how to use leverage or why you should use it, because the answer it just shows that you're a beginner, and beginners don't need to solve these problems. So you should be probably paper trading or trading with such a low amount of money it doesn't really matter, because you should be learning. And I use this analogy as well with the blackjack. You can learn how to count cards. You can learn how to, there's theoretical perfect playing blackjack, and you practice all those things. You wouldn't think, I'm going to learn how to count cards and then start going to casinos using all your money and betting and thinking, I'm going to figure out how to count cards. You would learn how to do it. You'd practice it at home. You'd make sure that you can keep a count, and you understand perfect play. You'd run through a bunch of simulated hands, and then you go to a casino. You start small, you'd see how it goes, and you'd make sure you have everything figured out. But so some of these questions about leverage and whatever it is, it's the equivalent of somebody saying, when I'm counting cards, I'm at the casino right now. Should I be betting half my account or half my bankroll? It's like, no, you don't know how to count cards. You don't know what you're doing. You shouldn't be doing any. You need to get the basics down first. So anyways, when it comes to leverage, if you have a question about it, don't even use it. It's okay to ask questions, but just the fact that you have a question means you shouldn't even be trying to use it. You're not at that stage of your trading career. There was the question. Someone says, how much... Oh, they were asking WX, how much leverage you recommend. By the way, WX is a troll in the chat. Fun guy, fun member, but there's a good chance he's poking fun when he's answering your questions. All right. So there's different ideas for trade management. Someone just asking, I'll answer this quickly. Can you show how often you take profits on a swing trade? So there could be an argument for just saying, well, if you're in a swing trade, let's just create a hypothetical trade here. Say you're trading along through the highs of this range. At every point that you have exposure, you're essentially in a trade, right? If you're in a new trade, let's say at a new level. So let's just say I'm in this long, and price pushes up here. Should I take profits on this trade here, and why? It's about a 3R. Should I take profits here and why? And I'm going to go through this really quickly. So let's just say price pushes up to these highs and just breaks out. And I don't have a preset limit TP1. Well, I could just say, hey, you know what? If we're taking these highs, we're breaking out, we're not rejecting, I'm just going to carry my whole position higher. If we're rejecting, at that moment that we reject, and I'm carrying this long, I have a decision to make. I am in a breakout long. Let's forget where I entered. I have full exposure, a full position size here. If I don't have any plan to take profits, if I don't have any, like whether it's a break in local structure, however it is, I have full exposure. And if my only plan is to carry my trade higher, then I'm in this setup, essentially. I've turned this setup into this setup. I can adjust that. I could say I'm going to take half if we break below that, if there's some ascending structure here. So you're carrying full risk at a rejection of key highs. I would manage that in two different ways. I would say, well, if we get some weakness, I'm going to take profits. I would take profits right on the swing failure, or I would hedge it short. I'd say, I still want to push. I still think higher is likely, but we're getting a local rejection here. I might take a short on this swing failure down into an idea of a retest. And maybe this hedges me. So essentially I'm flat here. It's as if I've closed my entire long position. I've taken full profits here and until I remove the hedge. Price comes down. Maybe we get that retest. And maybe I cut my hedge. And so it's as if I captured full profits here. Or maybe we come here, I take half off, there's bullish absorption, whatever it is. There's lots of ways to manage a hedge. Or I just leave the hedge. Let's say I leave it. Well, then price comes back and breaks out. I get stopped out of my hedge, but I protected myself while this was happening. And then we carry on to the next target. With swing trades, I like hedging. Here, I think this would be a clear hedge. I want to carry my trade longer, higher. And I did that here. I built a lot of longs here. And as price came up, I said, well, am I going to sit here with full long exposure? I have like 4 long positions. Well, price is rejecting from these highs. No, that's just silly. Now I'm sitting in. I went from having I had really tight long setups in here too. I had like 0.3% stop losses that held on some of these ads. So I'm turning some of these positions into this, and that's a dangerous place to be. So I took shorts as hedges, and those worked out well. I mean, obviously what you'd really want to do is say like, well, you take profits on your entire positions at the top and you short the bottom, but sometimes that's not realistic. And so you need to play probabilities and say, hey, I want to take some short exposure here and not have full long exposure at the top of the range if we're rejecting. So the other idea is you just lock in the winner. You say, well, you know what? Prices come up here. We've had a nice move. I'm going to lock in some profits. And if I get a nice retracement, I can add back to my position. If we just break out, I'll carry what I have left higher. So there's different psychological reasons to do different things. Sometimes it's just nice to realize some profits. You take the profits, you let what's left carry, and maybe you don't even think about adding on retracements. It depends how precise you want to be with your trading various time frames during a swing trade. Do you want to add on retracements, so on? Getting a lot of wicks here on the 4 hour. Be interesting to see how this develops. But I'll just say this, and I'm gonna make a video about it. Like, we're talking about all these different concepts. The whole idea of the LATF is to learn and develop different skills and tools that you can deploy in your trading. And so asking questions is really important. But all I'm saying is, if you have these questions, some of these questions, you shouldn't be trading. You should be learning, right? And that just makes sense. There's nothing wrong with paper trading or trading with an insignificant amount of money until you have collected your own personal data and you know what system you're executing. And it's not necessarily about the system. You don't need to trade support and resistance, swing failures. You could trade breakouts. You could trade, there's lots of different systems. But the point is, whatever you're trading, there's foundational things you need to be applying, whatever type of system or style you're trading. And you have to apply that foundation. You have to collect data, and you say, hey, is there an expected positive result here? And I'm going to start deploying more capital. Okay, now I understand risk management, bankroll management, and I'm going to size up a little bit. But by that point, you're not really even asking anybody anything. You kind of know the answers, right? All right, let's cover a couple more altcoins here. We can look at XRP. I'm just scrolling through chat really quick. XRP, Doge. We'll do XRP and Doge. Those are two big ideas. All right. Why did I move this alert? There is an idea here. Where is this? I mean, this is quite clear, I think, if we can run these lows. Just a nice technical setup. And there are people who would get frustrated. Like, let's say they're trading this idea. They would say, if they take the long and then they get stopped out and they think, man, I'm so angry I took that long. You can't care about the outcome of a trade. You don't know what's going to happen. You just take it with risk management. It either works or it doesn't. So anyways, I hope people understand the idea of probabilities that are considering trades, and you're not you're just saying, if it works, I make more than I lose. If it doesn't, I lose a little bit and move on to the next trade. I think that's an interesting idea. We ran right through the local golden pocket here. I mean, I would be interested in this long. I already kind of had it marked out as a possibility. I'm also interested in a short. If we can, fill this wick and sweep these highs. I think these would be nice setups. I'd be willing to just trade this as a range primarily. On the higher time frame here, something that was addressed in the LATF in chat by several. Let's just get rid of these setups. We tapped the 382 on the high time frame. It's actually kind of a bearish high time frame fib to get a major reaction from. I have a nice high here. So this would have been a beautiful, like scalp short. Obviously price moved down a lot, but just reacting to this reaction, nice tight invalidation, taking this high right into the 382 on this big impulse. Yeah, it's a nice idea for a reaction. Even if it's a very low probability trade after an impulse like that. Just want to see if this ascending structure is getting interacted with. I'm going to use the highs as the anchor and just see where the lows. It's not super clean. We got the center line, it's okay. But yeah, from the impulse low, sweeping these range lows, that'd be an interesting idea. Retesting these highs, I'd be interested in a short back into this. Maybe we come back down and test these lows, or sorry, these old highs, and that would be aligned with the golden pocket. And just kind of eyeballing that, but it looks about right. Obviously, you want to clean up these lines a little bit. You want to clean up your analysis. You want to look for some confluence. If this happened, well, this would be, there'd be a new structure to assess, right? Like depending on when it happens. Let's take this trend line because this was the golden pocket. I actually took a swing long that I had to close because I moved off that exchange. I took this swing long back in March on XRP. So the first trade I'd taken in on XRP in a long time. And the idea here was coming and sweeping this local low for super tight invalidation. We had a little descending trend line here. Or was it from this low? I thought there was a really clean one. It might clean up a little bit on a lower time frame. But anyway, sweeping this low into this key level, a reclaim, a nice long entry there with a stop under the wick. Got a strong impulse. But anyways, I'm pulling my trend line from that last pivot. And this would be interesting to me. If, you know, the timing all coincides. It's a long ways away. There's probably two setups in between that would make sense. A long, a short, and then maybe look for a continuation trade long here. If there's a local structure, that'd be nice. A nice wick into that trend line. You get a similar setup as this with local invalidation. And then maybe you trade it up into these highs to $1.40. That'd be interesting to me. But some, you know, a little bit of volatility here, consolidation, run back, run the lows. That could be a very nice idea. Of course, price could just pump through all these levels. But these would be the things I'm looking at locally on XRP. That local low getting swept, the local high, maybe back into a retest of these old highs. Key fib here, low to high, ascending structure, depending on when it's tested. All quite clear. This would be in October, I suppose. This is how I like to think about price action. Can set alerts, have a plan. If I get the levels, I get them. Of course, lower time frame stuff can all be viable. You could say that, well, if you know this happens, I'm interested. You could try a break of the trend line here as a wider setup and look to trade it twice. Probably want to consider this as a potential trend line, frankly, that we're potentially breaking out of. But you could try to trade it twice. You could say, well, here's a 6R, you know, wide, 5R wide setup, smaller size, 6% stop loss. You could tighten it up, an 8R. And if I get stopped out and we reclaim this level, I could try it again for a bit of a whatever. So anyways, local, that's what I'm looking at XRP. If we break out of these highs, not a lot of structure here, and you wouldn't think it unreasonable to come up to these highs over the longer time frame if we don't reject here. Oh yeah, I'll look at compound as well. All right, let's go to Doge. Yeah, we'll do Doge, we'll do compound, and then we will we'll wrap it up. I hope you all enjoyed this live stream. I want to go to here. So yeah, obviously breaking out. This is a very nice kind of grinding structure, grinding consolidation. This is something to watch for in all time frames. You'd be surprised, even on like the 15-second time frame. You'll start seeing this ascending, grinding structure right before an impulse. It's always something to watch for, and then an impulse comes. It can happen to the downside as well. It's not a guarantee, but again, if you just kind of see that grinding, higher lows, likes to sometimes end in an impulse. Same with this, kind of grinding down, whatever. It happens on most time frames. All right, so Doge, well, personally, I'm not interested in fading this move here. This would have been a beautiful long. Maybe I do need to. I've spent a lot more time looking at Bitcoin and ETH, but this would have been just such a clean swing failure long. Such nice invalidation, taking that impulse low. This would be a very similar setup. Was it Sol that we covered earlier on? Just taking that impulse low and you reclaim it. You have nice tight invalidation. Maybe a bit of a range idea here. Whether it works or it doesn't really matter. It's just a technical setup. So I'm not going to fade this. Fading it means shorting it. I probably, however it goes there, I wouldn't be surprised to see Doge come up and take these highs. Obviously, we're going to form local structure. We could reject from these local highs. We could come back down to the lows. Personally, I would say if we come back and test these lows, I'm interested in a long. I don't think that's particularly likely, but might happen. And if we come and take these highs, I'd be interested in a short on a rejection. If we just break out, well, come and take some of these highs. But there could be an argument for trying, this breakout long, there would be an argument if we consolidate under here, get some nice local structure. There could be an argument for trying a breakout long on this as well. Typically not the highest probability trades, but need to form some structure, give some nice validation, or you could look for a local range to form and try to grab something like that as a tighter invalidation long. It's a nice little ping off that level. We washed through it a few times first though. But clean break, consolidate above, ping off the level for another impulse. The problem with breakouts, it's like anything. You can wash around the level. So you take this breakout, you lose. You take this breakout, maybe you run a tighter stop, you lose. Maybe you don't take the third breakout. That's the one that works. There's no easy way to trade. Setups, long, or trading support, resistance. I prefer support because typically, like you can just kind of see like how price likes to wash around breakouts a lot, fake out, fake out, fake out. But when price, and so what happens? I'm just gonna explain this really quickly. You're gonna often find it when you're trading breakouts, or breakdowns. You're gonna often find yourself in positions where you've just longed the exact top of the move. Like you long and price instantly moves against you. You long and price instantly moves against you. The trade doesn't work and that's fine. You take a stop loss. When you're trading support and resistance, even if your trade doesn't work, a lot of times you're going to find yourself in a position where you take the long and price instantly moves in your favor. And you suddenly have you have options. Maybe you end up closing an early TP1 or whatever it is. I'm not saying you don't get stopped out of longing or shorting support and resistance, but often is the case where if instead you shorted every test of the highs, instantly in your favor, and then you get stopped out on a third try. So the math can work similarly, even trading breakouts, trading support and resistance, but you're going to find yourself counter trading the market a lot in a way the market likes to move. Instead of thinking about these as breakouts, think about them as shorts. Think about this as a short. Think about this as a short. And think about retracements as longs. this wouldn't have worked, or unless maybe you get a break-even stop. So a lot of times you are able to get out at break-even or with a TP1 trading support and resistance, even if the whole idea doesn't work, and you're not going to find yourself breakout long, instantly price moves against you, and you take 20 losses. You can get very emotional trading breakouts. It's very hard to time the one that works. I don't know why I went on that tangent. Let's look at compound. Well, there was a golden pocket retracement, I suppose. And we'll wrap it up here. Let's go to the daily chart. Kind of similar to Bitcoin's local structure here. Not exactly. We take this low. Again, beautiful swing failure long setup there on the daily. Just take that, wick through that low, reclaim it. You're instantly in a winning trade, winning swing, and price just moves straight in your favor. No sweating, right through the highs. But that is not a trade that is available anymore. Similar idea for a short. Might have gotten chopped up here. I don't know how the low time frame progressed, but you know, shorting the swing failure there could have made sense. You'd have to run quite a wide stop. Shorting the retest. On the daily chart, I mean, this is what I would be looking at. Just a simple range. I mean, this sure looks reasonable to come back down to the lows of the range. But I'd just be waiting for clean setups. There's some nice volume in this wick though, locally. What kind of confluences do we have? So you can trade lower time frame, just apply the same principles. Is this the 786? Alts like the 786, getting a nice little local bounce there. Look at some local structure here, just for fun. And there it is. I mean, the reason I'm pulling this is because if you analyze these different altcoins and assets enough, you'll see this so often. Like the reason I'm pulling this, it looks vaguely like a trend line. It is. You'll see like that 786 tap right on the trend line on high volume, right at the lows as potential long setups. These are things I would be waiting for to execute precise trades if I was trading the asset. Alts tend to behave with trend lines okay. I find Bitcoin just seems to hate them. It seems to fake them out a lot. Establish trend lines. But alts, not so much. You can even argue this was a sweep of an impulse low. Is that a daily low? Where's the daily candle low? Yeah. So that honestly would have been a really nice long setup. You have your daily candle low here with the impulse, 786 trend line. Catch that wick with a nice tight invalidation long. You could probably have argued to trade it a little wider, maybe something like that. But it's a little late to be looking for longs up here, I would say, for the style I like to trade. Price has moved 6, 7, 8% from the lows. You could have argued just trading this really tight as well, but I mean, you're kind of rolling the dice there a little bit, but that interaction, super clean. I don't know. Compound, I mean, as far as, you know, what people maybe tune in for this live stream for like high time frame ideas, it's just the structure here is we're range bound. We could break out of the range, and you would suspect that if we do, that this could be possible to come up into these highs just because of the lack of structure. We'll notice a theme here with Bitcoin, ETH, everything is testing major breakout ideas with a lack of structure above, right? Like there's no structure here. If Bitcoin breaks out, ETH breaks out, you could imagine price moving up to these highs. If Bitcoin breaks out, we could imagine price moving up through this structureless area between 32,000 and 48,000. Same thing with a lot of alts, not all of them, obviously. So for high time frame ideas, well, what I don't do is I don't say, oh, I think we could break out here, so I'm just going to open a random long, not use a stop loss. If I want to trade something, I put in the work. So I start marking out ideas. I mean, I would like to think that if I was analyzing compound before this level was hit, I would have found this idea. Maybe I wouldn't have, maybe I would have. Sometimes the ideas become more clear after they happen, but I oftentimes find these ideas before they happen. I would set alerts, I'd prepare for that trade, and as price was coming down, I'd say, okay, if I get that reaction, I'm going to snap that long position. And I would take it with nice tight invalidation. So here, we do the same thing. The key level's been tapped, nice liquidity here. So I say, well, how do I get into a long here? I missed the more ideal entry. It's like, well, I need to wait. I need to wait for a nice setup. But the whole idea is, like, you can't trade everything. I mean, I don't know. You can't trade everything, so there's tons of opportunities, endless opportunities in the market every day, week, month, and year. But you'll never consistently seize them if you're not putting in the work to analyze whatever it is you want to trade and then seizing the opportunities when they come. I wouldn't be surprised to see a continuation here, but it's very hard to say, like, continuation from here, come down, retest, sweep the liquidity. So typically what I would do here is I would say, if I get a retest, maybe if I swept these lows, I'd try a tight invalidation long, but if I don't get the setup, then it's just I've missed the trade. I mean, this is, because here's your invalidation. You could try all these random little scalp ideas off low time frame structure for a breakout, but your invalidation here for this setup is really here, and so you're running really wide invalidation unless you want to just try, like, oh, we break this local descending structure, I'm going to try a breakout long and hope for continuation. But that's a scalp, because here, if you don't get a breakout here, I mean, you could put a stop to entry, but this is going to be over time. You keep doing this. It's not, you need to take profits because your local structure is being interacted with. You could hope for a breakout. But anyways, I'm not going to get into all of that, but you need to manage your trade on the time frame you're taking it on. If you don't, you could get lucky, but typically doesn't end well. You're welcome for the live stream. Somebody's asking if I'll leave it on YouTube. It will be up on YouTube. Same person asking, am I trading only high time frame or also scalping? I answered that earlier, but the basic answer is I trade both, but you don't take high time frame trades every day because you don't have high time frame setups every day. So obviously you trade lower time frame setups more. I'll say this, win rate doesn't matter. I'm not going to share my win rate, but it also, like, if you're trading a scalping strategy or a swing strategy, or you might even be trading some kind of breakout strategy or some kind of swing failure strategy, there's lots of different setups. You could aggregate your win rate between all the different setups, or all the different styles of trading. But what matters more is your, like, you could have somebody with a 50% win rate could be more profitable than somebody with a 90% win rate, right? So this is something I've talked about before, in the LATF, where I give examples of, you could trade a setup with tighter invalidation, and you could take 4 stop losses in a row with tight invalidation, high risk reward. Or you could trade the same setup with a wider stop, smaller size. So your risk per trade is still, let's say, 1%, but you're risking having to re-enter 4 times in one scenario, or just have a 100% win rate, trade it wider and smaller. But somehow the person who lost 4 trades to get the tighter invalidation setup, still using technical invalidation, but trading it on a lower time frame thesis, has made 4, 5, 6 times more with a 25% win rate than the person with a 100% win rate. So like we could talk, the benefit of a higher win rate system and a higher win rate style. So for somebody who's just going to take a wider setup, instead of trying to trade something as a 20 or 30 R with tight invalidation on a swing failure, they're trading as a 5 or 6 R, is the psychological aspect of taking losses. So you could know that in the long run, the way you're trading is more profitable, but it's going to come with a lower win rate. But that's not enough to stop you from emotionally spiraling. So you're saying, you know what? I'd rather trade a higher win rate system, even if it's not as profitable, because I don't like the feeling of getting stopped out. Most people, especially new traders, I recognize that your stop loss is a part of your trading plan. So they want to look at a stop loss as like a bad thing, but really a stop loss is just constructing the trade within the within certain parameters. You're confining price action or your setup to be in your favor. And so like an example would be, maybe you're sitting here and you scalp this as a swing failure with a 0.26% stop loss, right? You scalp a swing trade off of here, and you've turned this into a 44R trade. Let's say with fees, whatever it is, let's just call it, 30R, whatever it is. You could do this. You could trade, say, I'm going to take every wick on these local lows as the same setup. I'm going to trade it super tight. I know I might get stopped out a few times, but I'm just going to execute that trade. It's going to be a little bit lower win rate, but super high risk reward. 1 works. So you've lost 3, you've won 1. They're all 30R, let's say. You've made $27 for every dollar you've risked. You've lost $3, you've won 27. Now let's take that against the higher probability setup here. Let's just say that you're going to say, you know what, I'm going to enter in, we have a nice reaction, some consolidation, going to give my trade room to breathe. I'm going to trade it with a 2% stop loss. I'm going to trade it up to the highs. For this to make sense, you need to understand, your risk management here. In terms of like your risk reward, like you can't risk $20 on this trade on a $100 account. That's 20%. You need to risk 1%, so your size needs to be relative. So this has a much higher chance of working. You aren't going to take any stop losses. You're going to make $6 for every dollar you risk. The guy who just took 3 stop losses just made $27, but lost 75% of his trades. I hope that makes sense. But so for example, here's a really extreme example. I won't name names. He's extremely popular. I'm not even saying like whatever. I'm not going to cast shade, but this is how he trades. He puts 1% of his account into every trade without a stop loss. So like, for example, if you had a $100 account here, he would say, I'm going to long Bitcoin, no stop loss, $1 position. My stop loss is $0. If price goes to 0, I lose the trade. If it goes up, I win. And he claims almost a 100% win rate. He says he's only lost 1 trade in the last however many years, and it was Luna, because Luna did go to 0. But that's an absurd claim. And I actually had a member who I want to be a little bit meaner than I have been in the past. He was an absolute idiot. It was an old member, but he said, this guy has 100% win rate. I've been in his group. I'm like, what? He has 100% win rate. Like, what are his setups? He starts sharing them. I'm like, all his stop losses are 0. Like, he literally can't lose a trade, ETH, whatever it is, unless it literally goes to 0. And his size is 1% of his account. So he's using risk management, but the trade setups make 0 sense. Just, he's 50. I'm like, so he's showing me this setup. He's like, he hasn't taken. I'm like, this trade he shared is 50%. Prices come down 50% from when he entered. And he's like, yeah, but it's not a loss because it's a validation. I'm like, well, you can trade that way if you want. I mean, I'd have 100% win rate too. How could I ever lose? Every long I've ever taken is just, it's not a loss. I could long here, I could long here. My invalidation 0. It's like, okay. So anyways, that's just an extreme example, but there is somebody who's doing that and claiming 100% win or 99 whatever. It's like, okay, I mean, that's technically true, but it doesn't, that's not how I would say is the most efficient way to trade. You're not really capitalizing on, like, why even do technical analysis? It doesn't really matter. And the funny thing is, he has good analysis. Like, his trades are very I've seen him post some really good analysis with really refined kind of entry ideas, but it's like, okay, well, you're not really capitalizing on the fact that if this level holds, it literally doesn't matter if you entered here or up here with the size you're trading. It's like a 0.02% difference in your reward. So anyways, 2 extreme examples. Trading tighter setups can offer a better result with a lower win rate. Trading with an extreme win rate, you could outperform somebody with the example I just gave that has a 100% win rate, and they could have won 100 trades in a row, and you outperform them with 1 trade because their setups are so crazy. So anyways, that's the end of the live stream. I'll chat to you guys later. Hopefully you found it useful. I'd like to see Bitcoin continue here, but we'll see what happens, consolidating with bullish absorption. But of course, the longer we continue to range here, the more likely we continue ranging, and maybe we do start seeing some of this kind of price action. This is an example I gave in the Discord. I'll share it really quickly. Sometimes, which we kind of almost had that situation, but it didn't quite play out. Like in this range, price is leaving these wicks behind and then moving away from that level very quickly to the upside, to the downside. There's no consolidation. Sometimes you expect to see some consolidation, but we haven't been getting any. Top of the range, straight to the bottom. Bottom of the range, straight to the top. Here we're seeing some consolidation. Is that bearish? And we even saw a retest of the lows. Not necessarily at all. I mean, we've seen many cases of price consolidating. This is the example I used, where we consolidated for 5 days, ran the low, ran the low, ran the low. I'm kind of using this as a bit of a framework for the current range we're in. Come and test the highs. If we reject, hey, maybe we run the lows one more time for another impulse up. That's 4 days. We reclaim the highs and we have that leg up. So if we wanted to imagine something like that happening here, well, it would look like this, and maybe come and take those lows again, or however it forms. It's always a possibility. I'm going to be, if I'm available, scalping every sweep of these lows as a tight invalidation long. I like those setups. I did the same thing on that example here, and where are we? And I ended up with a 30R setup. So, I took these sweeps as longs, and again, it can be a frustrating style to trade when price is ranging, you're in a winner, and then you come back down, and you're looking for that move back up through the highs, which I was, but price ranges for 5 days, and you've got to execute several entries, but you end up with a big 30-40 R trade, so it's worth it in the end if you catch it. But you're using risk management. If I lose, I'm not wrecked. If I lose 3 trades in a row, it doesn't wreck me. I'm kind of expecting I might lose a couple of those tight invalidation setups, but it pays off when you catch the 40 R trade. All right, thanks guys. I'll talk to you later.